Hello folks, I'm Melly Little and this is your daily TA Wrap, where we take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves what happened today and what does it tell us about tomorrow. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from what is a very snowy Rocky Mountains. Do the show on Sunday as well, a weekly show. We try to take a little bit broader perspective. I think last night was a good perspective. A lot changed last week. We ran over that in the weekly video I do with members. Also did that last night to some extent on the weekly show. Apple was the number tonight. Reports after the bell. Apple gets crushed. Down 45 points, I believe, is where it ended. Big numbers. Market under pressure. Apple disappoints. Not a good scene. Let's look at the ending numbers here. Let's take a look at what is happening and what we believe is going to happen as a result. Let's pop, where did it go? There it is. Alright, so what we did see today, and what was interesting, and it's part of what these numbers are, is we saw the industrials, the S&P, trying to make a bottom, right? And they were actually, they were putting in a decent bottom. After hours, Apple does its thing. NASDAQ's down, the NDX is down another 35 points or so as a result of Apple. Apple down 45 itself. S&Ps don't want to sell off after hours. That's telling you that, Apple isn't the world. It used to be. It's still a huge part of the NDX. But what it's also really telling you is that divergence, and I know I pointed this out before, I know I pointed out to members for sure, that divergence that we saw where the NDX was outperforming, the Russell was outperforming, the NASDAQ was outperforming, the OTC issues, that outperformance has been taken back. That's what happens when the market goes the other way, right? You get larger sell-offs in those things that have stretched farther, and in particular anything that's a quote-unquote growth story, which is what's in the Russell, which is what's in the NASDAQ for the most part, right? Or a good piece of it is. Those things get crushed, right? Because they're multiples. They don't support the price. You don't have earnings in some cases, and what earnings you do have in other cases is not very much. So you're banking on the future, and when the future don't look so bright, it's a bad scene. Industrials down 41.26, 15,837, almost 838. The S&Ps lost 8 3/4. S&Ps finished off that range breakout projection. It was right around 1780. They hit it. They went as low as 1772.88, 1773. They did a nice big reversal bounce, and then they sold off back into the close. Composite 44.5 lower, 4,083, and I believe that range projection we had there, or the projection there was around 4,000. NDX 32.5. 3509, and the Russell got hammered one more time, 16.5 lower, 11,027. If we keep going at this rate, we'll be 11,000 before you know it. Elsewhere, gold sold off, and it's still, is it down that much after hours? No, it looks like it's not trading after hours on this contract. So it was down $9, 1254.40. We had silver down. We had nat gas getting spanked. It's up slightly after hours. Oil was down big, $1.57 here I see, and the UUP flat, no change. Let's go over and spread this back out and take a look at these markets. So we'll start with the S&Ps, and what do we got here? So the trade that we had, that was on, right, was a range trade. That range trade was this area right? Initially, we were wondering if it was going to break to the top side. It didn't. That did not happen. It broke to the downside. So where does it break to on the downside? Well, that was the projection. It went all the way down there, finished it off, closed almost at that level. And this is interesting because today I was looking at the SPY. The S&P did not get to that low. Volume's not there, or at least it doesn't look like it's there. Let's see what that volume was. 43,277, 4452. So we didn't get to the bottom, so we didn't test that low on the S&P index itself. And hang on just a second here, 1774. And that low was 1772. So we got into these. The other bars I was watching were these two. We got into the top of that high volume bar. Volume on that one is 41. So we got into a 41. We only did 40, right? And that's with a relentless push down. Didn't test this. That's actually bad. You would rather it had just friggin' tested and get it over with, but it didn't. It got into here. This is extended. This wants to bounce. And that bounce is going to set up some sort of ABCD structure to the downside probably. Now, the question is can it get all the way back up here and do a retest, regenerate off that prior swing point low? I think that's going to be a tall order. In fact, this little zone up here is going to be a tall order to get over if it gets up there. But first, it has to just get back over the bottom of that wide price spread, high volume bar to the downside now. Yeah, and that price point, let's bring that up and look at it, is 1790. So that's going to be the first area of contention. You can see that this morning they were trying to bounce it. Right, they opened right at that level, bounced up, sold off, went all the way down here. It was one plunge after another, 3 of them in a row. Plunged, flushed, rallied all the way back up to break even again, actually slightly over it, and then sold off into the close. It was quite a ride intraday. If you were watching it, we can put the SPX up here, put it on an intraday, and you can see what I'm talking about. So, held up here, sold off, plunged, right, flushed everybody out, rallied all the way back up to there, then sold off at the end. If we go to the other end, so the SPX looks to me like it's trying to set up a bounce. Let's look at the it on the Dow Jones. So the Dow Jones, okay, so we got a low of 15,808. We got underneath it. Volume here was 1.2, 1.27. So volume was slightly lighter. That also looks like a bounce. And again, you got this exact same setup here, right? The retest regen zone, that big volume, Fed bar here. The big bar over here. This is going to be like almost impossible to get through on the first move back. I don't know that it can even get back up that high though. Probably something less than that, right? Set up an ABCD structure to the downside, or what you would think that would be what it would try to do. Now the other thing, and I pointed out last night, is that if you're doing the classical TA stuff, they're going to point out head and shoulder stuff, right? So if you were to get, and I just don't mess with all those things, if you were to get some sort of an ABCD structure, right, that would end up setting up this left shoulder, the head, the right shoulder for a potential break of the ABCD to the downside. And in this case, depending on how you draw it, the classical guys would probably draw it that way. Let me clean it up real quick. They would probably draw from here. This is the way I used to do it, and it's actually going to be too high, so that's not going to work. So it really is just from here, but that would be the neckline, right? And the way those work is you take the projection from here to the neckline, you take that width and you project it down. And that's a big move, right? If in fact that sort of classical thing sets up and breaks. Now a lot of times they'll break and come right back though. So, there's problems with all these things. That's why, I forgave and gave up on classical TA and started watching volumes and started watching anchored zones, because there you can try to measure supply and demand, and it's not just a pattern, right? It's really not patterns anymore. It's supply and demand. It's looking at how things get tested. That's an ABCD structure of a downside, probably some sort of bounce coming. I got a question over here real quick before I move on. Let me look at it. So the question isn't a reversal on the weekly? I'll pull the weekly over here and we'll look at it together. But when you say a reversal on the weekly, we went up, we set, let's say it this way, there was a little zone up here, right? We've pointed out those zones in a different way using the other measurements, right? So now it's at the bottom of this zone, and I think I went over this last night, and there's another zone below it. It's going to try to get into the lower zone, but I believe it's going to bounce before it does. On the SPY, on the S&P 500, it's just a question of how far does it bounce. Is it a reversal? I don't call that a reversal. I mean, I'm not sure what you're talking about. You didn't test the tops again. What's bad here, right, is that this bar is volume off the top, right? That's bad. In other words, you didn't test it high, so you didn't leave volume up here anywhere. You came from underneath that bar, traded down, and volume expands, right? That says that you're probably going to range trade this thing, and definitely with the follow through, that certainly looks like the case. For me, that's not a reversal per se. To me, a reversal is when you go over something like, say, here, right? You get over the high and you close under it, and this actually closed over it. You can see the arrow. But had it closed under it, that would be a reversal, or like this one would have been a reversal. You get over it, you can't hold it, you come back down, right? You reverse off of it. And I don't hardly ever use the term reversal. What the term I use is, I have one term I use for reversal, and that's a 2-bar reversal, which is a different pattern than any of these. I call it a failure. A failure either at the highs, right, a test of the highs, a failure at resistance zone, a failure of some sort, right, because there's 2 or 3 different types of tests, and it depends on which one you fell on. So, all right, let's go back to the charts real quick. So the damage is really being done over here, right? So let's look at these guys. Here's the Russell. So the Russell, the big Fed bar, actually the Fed bar on the Russell is here. It's the 18th. This is the quad witching. Bottom of that guy's 1127, right? We get underneath it. We close at 1127.73. This guy is 1127.65. So you close just over it. You don't have the volume. That also looks like it wants to bounce, right? So that's 2 out of 3. We'll go to the NDX. NDX comes down, tests underneath the last swing point low, closes over it so it doesn't break it, trades underneath the big quad witching bar. 3502 was the low. You trade under it, you close over it. You come into the Fed bar, you close over it. You don't have as much volume as this one. That also looks like it wants to bounce. IXIC, and we already know that Apple has drugged this thing another 37 points lower tonight. So, even though it looks like a bounce, it's going to be a heck of a job tomorrow to bounce. Apple would have to do one heck of a reversal, I guess. Or something else, takes up its slack. But it looks like, at least as of tonight, it's going to be some more pressure. 40. So this is the IXIC. So it comes into the same, it looks exactly like the NASDAQ. Did exactly the same thing. Only difference here is now, and this is going to be the difference. Here you break the low, right? So your trend's going to change to sideways tomorrow, right? It was bullish confirmed. This is the first time back on a retest regen into this bar. The breakout bar happens to be the high volume bar, so this doesn't have the juice to break it down. This looks like a reversal, or not a reversal, but a bounce. So all of these look as if they're going to try to bounce. The one that's really going to have a hard time is the NDX, of course, given the Apple trade. And if we look at Apple, for those of you that are Apple folks, let's see what Apple looks like. So Apple trades down underneath all these lows tonight. It breaks this swing point low. It's going to break that swing point low. It's going to break this swing point low, at least in terms of where it's going to open, it appears, because it closed around 506. Let me pull it on the weekly right quick and see what the weekly looks like. And on the weekly, you got a low at 512. So that's going to break on multiple time frames. You're going to be coming into a big bar at 515. And another one here at 504. Those are two wide price spread. One of them's high volume. I would think Apple will hold in that area, and then it's going to be a question of can Apple actually bounce and save itself? And what I mean by save itself, yeah, it's actually that zone. So it's this little zone right in here that it's going to try to get to. And what I mean by save itself is can it hold above this swing point low on a weekly? Right? We won't know that until another few days and we see how bad it trades. And, you know, it would be amazing, but can it actually get back above these two swing point lows down here? In other words, can it trade back over 512 and hold over it tomorrow? If it does, it's going to have one single break. That's not going to be too bad. Of course, it means that you're going to range trade this thing for a while, but the damage wouldn't be nearly as ugly. And given that this is the heaviest weighting in the NDX, something to be this damaging is a problem. Let me flip over and look at a few of the sectors right quick. All right, so let's start and just run down the list here. So we'll start with the transports. So all the indexes look like they're going to try to bounce. IYT, volume expands, you break a swing point low. I don't see the bounce in that one. That one's a mess. Semiconductors, they break swing point lows. They don't have the volume, so they're suspect. They're coming into good support. So they test into the December 4 bar. They hold it. That looks like a bounce. XLB. Okay, so this one just got, I mean, you're talking about plunging. This one goes from 46.5 to 43. That's almost 10% in 5 days, in 5 bars. That's about 8%. That's pretty heavy duty action. Okay, so this one had already broken. Remember, when you break multiple swing points, you know, the odds favor a continuation. So you broke one here, you broke one here, and what do? You continue Friday, and you try to continue today. And you try to go break out some more. It actually held these today, so that suggests a bounce as well. And this volume bar, you don't have the volume right into that area. That looks like a bounce as well. XLB wants to bounce, but you can see the kind of damage that's taking place on these things. XLE breaks multiple swing points, extends down, and it broke on multiple time frames. This one is going to be a retest regen off of this area, and that's going to be tough to get over. So the XLE is, for me, is always a hard one to trade because it seems to do extensions that are more than it should. But that's the trade on the way back up. The short is in here if you want to short something. But XLE, can't tell if it's going to bounce or not yet. If we look at the XLF, okay, so this one tries to break the swing point, doesn't have the volume, and can't hold it. 21 was the low, it gets underneath it, closes just over it, also looks like a bounce. Again, multiple swing points break on Thursday, plunges Friday, plunges again today. You usually extend 2 to 3 bars. You've already got 2 under your belt. This one's going to probably bounce. So all of these, as I'm flipping through them here, look like they're going to try to bounce. And if that's the case, those indexes that we just look like they're going to try to bounce as well. Here's the industrials, also a bounce. You test into that Fed bar. You get underneath it, right? You hit it with huge volume. You get underneath it, you break multiple lows, right? You get the extension, that's 2-bar extension. Over after an extended move. This is a 2-bar reversal. That one wants to go higher. XLK was the only one that had not broken down. Well, this one is definitely going to break down. At this point, it's right at the lows. It's still bullish, the only sector left. But that's going to change tomorrow, it looks like to me, but I do think it will hold the next level. XLP. Okay, so XLP is already broken, and there's no music here. This is an ABCD structure to the downside that's already completed. And you can kind of see it there. I'll just draw it in right quick, but that's an ABCD structure, and it's done, right? It's already done. So this should try to bounce, bring it back up into these levels. Okay, so bounce there. So bounce everywhere except for XLE is the only one that you can't tell. Oh, and the IYT wasn't a bounce. Utilities, really nothing happening there. They're just sideways trading. They're kind of a safety sector, and they've been beat up so much that they're finding a little money. Here's the XLV. Remember the XLV? It had extended and extended and then extended just a little bit more, and then it just caves in. Big volume comes out of it, and I don't see anything nice about this. So it's going to try to test this again tomorrow. Given the extent of the decline already, and given the rest of the market wants to bounce, this one will probably test into it and then bounce. 55 was the high, 503 was the low. I would think it hits it tomorrow. And actually for the bulls, that's better. It didn't actually test into it with more volume, but it will try to come back and test it again probably. XLY, now this is the one that took the big plunge early. It's the one that couldn't hold up. I actually wrote an article about this, and it turns out that it just did what it wanted to do anyway. ABCD structures extends way beyond where it should have. It broke multiple swing point lows, extends down 2 bars. This one can extend farther. It's maybe it gets a little bounce first, but this one's going to try to get to the bottom of the November 8th bar. So we got a lot of damage all over the place. I don't see anything particularly interesting other than bounces. Let's see what the Ox markets, let's start with the bonds, because the bonds should try to pull back, which they did today. They tried to fell, and they did fell, and they felled with no volume at the top. These had already finished up an ABCD structure. I talked about it last night, saying that we should see some sort of a retrace here. So there's an ABCD structure here that finished, another one that just finished, right? There was 2 nested inside this one. There was another one here. They all finished, right? You get a 2-bar reversal at the top. I wouldn't say this is extended, but it is an over-under at a minimum. Volume tails off. This thing's going to try to come back in and do retest regens now off these highs. This would be the first one. You got another one underneath it, right? And then you got another one even underneath that one. I would think this area is where it's going to try to get to, somewhere in here. So bonds pulling back also supports the idea that a market should try to push higher. We saw the dollar didn't do anything. That's good, actually, as long as it doesn't cave in or skyrocket. That will support a move. Let's go over and look at gold. Gold should pull back. The speculative, fearful stuff, gold doesn't even test, just pulls back. So gold's going to come back into this bar. January 6th, 120.39. Yeah, we should get there tomorrow. We'll see what it does when it hits it. That was, the reason that's key is not so much just this bar itself, but that was the prior swing point high that had volume on it. It's right in that same area. That's the area that you got to get underneath if you're going to push this thing down. Now gold, if you remember, gold has been a weak link, right? It's trying to turn here, right? If you pull over the weekly, you can see how weak it has been. It did test, it held, it's got a little bounce going. I would think you come back in on the daily, test as low as potentially into this area, these lows, this little area here, probably get into that, right? Off these bars, off this low, off those lows, and off these highs. All of that area, that's where it probably is going to try to get to. But first, to get there, it's got to get over, or under, I should say, these two bars, right, the tops. If it does, gets back down into here, then you got to think that lower price point. Let me see if there's any questions out here. I'll try to answer them for you. Let me check text. See if there's any text messages. Hang on, let me see, and then I'll look to see if there's any. No text messages. Let me check the email to see if anybody wants anything from there. All right, so this is kind of a general question that was emailed in. So let's try to tackle this one. So, and actually it's interesting because this is similar to a couple of questions I had from members today. In the particular stock this person is looking at is GM again. So I think we've talked about GM before. I don't remember if this was the same gentleman or lady. But the question is do you buy the retrace on a bullish, right, stock? And I assume we're saying bullish. That's what it says in the email here. I assume we're saying bullish because, you know, it's been on a big uptrend. But of course, everything's been bullish, right? This low, it gets under it with volume, right? It hits it with volume, gets underneath it. Volume's pretty high. Your first retest regen fails, it looks like, on the weekly. 36.46. No, it actually held. Hit it with more volume, but held. So what does that tell you? Well, going back to the question is should you be buying it? And the answer is no. Right? If you're buying it, you're not buying it for an intermediate term trade. You're buying it for a bounce. And that's what everything is going to be right now. You just can't buy for anything else. So to dissect it, you come into the retest regen, right? You hit it with pretty big volume compared to the volume that you broke out on, right? So a little bit more. It's definitely more than this one, right? So you hit it with more volume. You're getting a little doji today. Yeah, this thing can bounce. It can bounce up to the top of this high, and it still works, right? This is going to be the deadly point, though, off this big bar on the way back on the weekly. So if you're looking at it on the weekly, right, that's going to be tough stuff. Where is that? That's up at the top of this bar. That's at the top of this bar. Yeah, you can get a bounce. If you want to try to play it, you know, there's a couple bucks in it, but don't get caught in it. You know, that's the issue. Fed meeting on Wednesday. The risk is to what? The upside. In other words, for the markets, the risk is to the upside. Why? Because they've already said they're going to do 10 bill. If they don't, if they do a little bit less, I think the markets rally. I think the EEM, all those guys rally, right? The emerging markets, the Dow, all of them. If they do the 10, it's expected. You may rally off of it anyway because that's what you didn't do anything worse. Now, if you do something worse, of course, then that would be worse. The odds of that seem to be pretty low. So I think the Fed probably helps the market. I think that probably helps tomorrow and Wednesday. And we'll have to see how far this bounce can go. To me, a lot of damage done. I wrote 2 articles today. If you haven't checked them out, you might want to. One of them for Minionville, the other one for Market Watch. Both of them talking about caution. It's time to pull in your horns if you haven't. And that's where I guess I'll leave it. Folks, thanks for joining me. Have yourself a great night, and we'll do it all again tomorrow. We'll see where this market wants to go. I suspect you get a bounce tomorrow. Take care, folks. Good night.
Bye.